I update the app? What is this? I just did that, didn't I? It wants me to update. I don't know why. TradingView wants me to update the app. It says relaunch to update, but it didn't update last time. So who cares? I'm not worried about it. They did probably just added an icon or something. So, today, Tuesday, April 21st at 7:30, we're listening to Deanna, live futures trader from Top Step TV today. She's on in the mornings from, I think, 6 to 8 or something, 6:30 to 8. Or maybe just an hour. I don't know for sure. But completely free. And got that on in the background. And yesterday, let's get into the charts. And I was looking at some stuff. I was actually going long term and kind of turning everything off and just going with like some clean charts this morning. And the reason is, and I'm going to tell you the reason is because the markets are in a space, I believe, where there's not a real lot of there in that we're trading at all-time highs in all the equity markets. Gold's probably a little bit different, silver, copper, and then crude oil. And then, I guess I'm just brought up crude oil here, and I'm looking at a daily chart. And I got in a little bit of I'm not going to call it a tiff, but, a little bit of a, I guess, difference of opinion. And I knew I was right only because I do this, right, on an ongoing basis, and I watch the price of crude oil. And I remember when it was, well over $120 5 years ago. I remember 4 or 5 years ago. I remember, and it was up there for quite a while. It wasn't just a short time. And I remember I remember stopping in and filling up a diesel, and the price of diesel was just, they didn't want it to go over $7, but I remember paying $6.99 a gallon for diesel. And I remember paying over $5 for quite a while. And it was my first kind of diesel engine I ever owned to fill up, and quickly realized that diesel was expensive. And it's gone down since then. It's gone down a lot. And then I just brought up this crude oil chart to just, basically go back. And oil overall, even through all this uncertainty and everything that's been going on and these spikes, it's right around where it's been over the last 4 or 5 years. It's kind of been in this same kind of spot from 90 down to about $55. All right, so, anyway, just looking at that, I'm saying, okay, all right, we have a lot of other stuff going on here. I get it. But the grand scheme of things, is oil really that high? And I'm not so sure it is. The thing that's interesting to me about oil is all of these huge, especially short term here, right? All these huge gaps, and most of them being gap downs. If you notice, gap down, even though we had a big run up, gap down. Not really a trend reversal so much on the short term, but more, I believe, consolidation, and it's likely we're going to possibly consolidate around, I think, this 70 to $85, $90. I think we're going to kind of fall in that range, even after all this is said and done, because I think we're going to need oil at that price. It's not going to, I don't think it's going to go down to 50. At least maybe not this year. Maybe late this year, November, December. But from, now and even after everything gets resolved, if it does, I think we're going to land in that, because at $70, between $70 and $80, everybody kind of makes money. Prices are good for the consumer. They, producers are able to make a profit. Explorers are able to make a profit, and everybody kind of wins with a $70 oil price. But anyway, that's my opinion. I'm not really trading oil. As I continue to mention, I don't particularly like that if I'm in a trade, and I'm going to start bringing up my couple indicators. When I'm in a trade, I don't particularly like the fact that on one bit of news or one bit of, and it's pretty much everything right now, but more so in oil, I don't like that my stop can get blown, or my target can get blown in a matter of seconds, and on one news item. And then not only that is the slippage. Like, a lot of people don't talk about the slippage, the amount of slippage that you get now in a fake account. And a lot of these accounts that everybody's out there in fucking la la land trading, you're not going to get that slippage in those. You're not. It's a fake account. It's sim. Even though they're paying, even though you're getting payouts on it, it's fucking sim. It's not real money. It's not real money. It's not a real, most of the time it's not a real, so to speak, data feed. It's still a sim data feed. And so the amount of slippage is so minimal in those accounts, because there's nothing behind the account realistically to stop it from filling that order, right? I mean, it's gonna, if you have a limit order in or a stop order in, it's gonna fill at that price because, again, it's not real. There's really nobody else on the other side of that trade other than the simulation. And the simulation will always give you the benefit of the doubt. But in a real account, and if you have a real data feed and it is a real account, the slippage is, in telling you this just from experience, the slippage is entirely real. And because in order for you to get out, there needs to be someone else on the other side of that trade for you to get filled. And if there isn't, your order becomes a market order. Even if there's a stop, it becomes a market order and then gets you out. So you have to have someone on the other side. If there is no one else on the other side, that is going to slip. And that is something that I never see anybody talk about. And it clearly tells me that the reason no one really talks about it is because none of these fucking fuckers are really trading in real fucking accounts. And so that is why it's never talked about, because they don't even know what it's like to have a real account and be in, multiple contracts on crude. Let's say you're in 3, and even if it's a micro, and see 10, 15, sometimes 20, I've even seen it as much as 50 ticks. Do the math. 50 ticks slippage, and then you're talking on a micro, you're talking $150 on 3 contracts, $150, $200 worth of slippage. That hurts. That hurts. But if you're in a sim account, you're not going to see that. And I have the data real time. I have these garbage, I call them garbage, fake real accounts. They call them real to make me, or Flex and, Direct to and all this other shit to make me feel like, oh, wow, look, I'm really, no, it's fucking fake money. Yeah, it's, and I have the real accounts to show that it happens. And it's one of the reasons why I wouldn't trade at crude oil right now. Now, if you want to trade it one of these fake accounts, that's fine, because you're likely not going to get the slippage that you get. But and I would highly advise that you do that. But just realize if you are in a real account, you're going to get some slippage, especially the way crude oil is trading now. You're going to get some serious slippage on trades, and just don't be surprised. All right, and so that's kind of my story there on the crude oil, and then looking at some other assets. I was looking at, and I don't trade it very much, and it's kind of bothering me a little bit that am looking at it, but I have been looking at natural gas, and the reason I've been looking at natural gas is I kind of like the price action I'm seeing in natural gas. Not so much where the price is, but I do like the price action of late. And we are on a, seasonality wise, we are on the downward trend on natural gas, right? As we get out of this summer, the winter months, we tend to use less and less natural gas. But I think, and I'm expecting that to change with a lot of these data center builds, because what I kind of foresee happening, and again, it's not anything I think is going to happen in the next 6 months, but I do see it happening, is where they're going to, or where they're able to, I believe they're going to put self-sustaining natural gas generators near some of these data centers that can support it. And that's a big reason why I think many of these data centers are actually being built out in the Midwest, in the middle of nowhere, no man's land. And because they have that access to the natural gas fairly locally, and these types of generators can be powered. Anyway, again, it's just something I'm looking at. It's kind of one of the reasons why I kind of like what's going on in the natural gas space, even though short term we're kind of on the down trend, right? You can see here clearly a downtrend, right? Lower high, lower high, lower high. Wrong one. Lower high, lower high, right? You can just wash, rinse, and repeat. Lower high, lower high, lower high, lower high. I mean, you could just repeat. Lower high, lower high, lower high, lower high. So it's definitely kind of sell the rip a bit. So anyway, I'm kind of contemplating getting a little long exposure short term, as crazy as it sounds. Again, it's one of these contrarian type plays where, look, here we are kind of smacking around on the bottom. There's also an area here that you could say is the bottom as well. That, I do think there might be a bit of a trend change here. So anyway, that's kind of what I'm looking at in natural gas. And I'm not doing anything today, but something long term. And I may actually start dipping into some options on Natty. As just kind of a counter trend type of thing. And I wouldn't go, and I definitely stick to the bigger, and I was looking at something out a while, not anything short here in May, but I was looking September, October, kind of looking at the next cycle, so to speak. And the next cycle would be sometime out in September or October, right? Because that's when we kind of start getting into those winter months, maybe even November. So anyway, I'll go in here and just look at an October. There's not going to be a lot of open interest in here overall because it's fairly out. But just looking in here, these fours, the $4, have a ton of open interest there. I would probably go a little deeper in the. I would probably come down a little further. That's one. That's more than a one standard deviation. Also have to look at where the November. Where is the no? Where is that contract trading? The October is 350, right? So you can see that there is much better, higher pricing out in those months because, right, again, a cycle. So that's one thing. So don't look at this price. Look at this price. And so I would go out in October and I'd probably sit around 350. That's probably the best bet. Right around, or even let's see with the 360, 370. No open interest there though. Nobody's buying those. That's always a problem. You never want to be the only one. But something small like this, like to me, I even like this to a degree, the 360, 370. I might even go 375. I mean, it's a little chunky on the buying power, about $780. But overall, I'm in contracts that have at least some liquidity. I'm a little out of the money on those as well. And kind of looking down the road. So anyway, that's kind of something I'm looking at on the natural gas side. And that's a little bit longer term. I'd probably wait for a little bit. I'd probably wait for even a pullback, a little bit deeper pullback in here. I kind of like this area. I kind of like this 250 area down here for natural gas. 250. 25.91 and then again 25.64s to take on that position, and then I might even actually take a stab down here if we get down here. I'm actually going to set an alert down here at 25.83 on the natty gas here. You're also going to be in a roll soon on this and some of the other energies, right? We're getting near the end of the month of April. We're trading May. There is usually get to that last week in April, beginning first week in May. You're going to start seeing money kind of flow to the June and the July contracts as they start to roll. Excuse me, it's probably not June. It's probably, here we're trading June. It's probably going to be July. So you do kind of start seeing that movement down the curve a bit. So anyway, that's going on. That's what's going on in natural gas. So I am looking at some natural gas. I would throw this out. There are a number of, I hate to say it, but there are a few natural gas ETFs, but none of them actually seem to be any fucking good. They all seem to be just trash. Unfortunately, they do. As much as I try and wrap my mind around, like, hey, maybe it's worth, you have this one. I think this one as well. This FCG. None of them seem to be any good. Boyle is another one, but I think that's actually like an inverse type of deal. Boyle. But none of them, as you can see, none of them really, and this is a daily chart, none of them really seem to be any fucking fucking good. And I've tried really hard to try and find a natural gas ETF because I prefer to, if I'm going to swing trade, I honestly would prefer to swing trade an ETF. I just find it a little, especially if you're like looking at a sector, I just find it a lot easier. To deal with than the individual. But with a thing like natural gas, I just don't think there's a way. I don't really think there's a way they can actually deal with it as a commodity because it is so effed up. And then you can also use like XOP as well because this, although it says oil and gas, it's pretty much equal as far as like the weightings. It's got just as many oil exploration companies as natural gas, and a lot of them are one and the same. So you can also use XOP, but you can use any of those others. And I'm just throwing those out there. I don't particularly. I have them on here, and as I said, if I was going to use any to, kind of work on my natural gas long thesis, looking out into September, October time, I'd probably stick, if it was going to be an ETF, I'd probably stick with this. Only because it's got better liquidity, it's got better companies overall, and it's not completely weighted in natural gas as a whole. So, anyway, just throwing that out there as well. And the XOP is relatively, but this is one trade here, and then the XOP is another one that I would take a look at. The other one, and the nice thing about the XOP is there's like good options in here. They're not, you'd have to go out to December. And the options in here generally, even though they're relatively okay, you just notice right out of the gate that the spreads in here, you could drive a effing truck through. I mean, look at the spreads. Now, when this opens, you will see a lot of these tighten. They will tighten up. But overall, when you look at these, though, man, you're like, wow, those spreads are massive. The other thing that's nice about it, the XOP, is that dollar wides. So you can take a stab at this thing and not break the bank, right? I mean, you do a 160, 161 right at the money, and it's a 50-50 shot. Or actually, no, you have to go a little more than that. Or the 162, right? So if you do like a 162, 163, this is going to change. But you get my point. A 162, 161, 162 is basically, that's wrong. There's no way that's a 70-30. And that's a 30. Yeah, it's pricing. You'd have to wait for this to open. But anyway, you get my point. You can literally take tiny stabs at this with some really, really nice small trades that you don't have to bust the bank on. And so that's what's nice about the XOP is the dollar wides. But you do, however, have to deal with these spreads that you can drive a fucking truck through. I mean, look at these. Look at the spread on this. It's like $4. It's just insane. That is insane. But again, you will see these tighten up as the market opens. They might not tighten up very much, but just be aware of that. That is kind of the downside of the XOP. Is the spreads do tend to be pretty hefty. But if you probably go up to, like, let's just go to May. You'll probably see the spreads be just as bad. Wow, look at that. They are just as bad. I thought maybe they'd be a little bit better. Oh, but damn, they are bad. They are bad. But that has always been a problem with this ETF as a whole, as that the spreads have always sucked. But you take the good and the bad. I mean, if that's what you can do, that's what you can do. All right, so that is kind of my natural gas kind of play. there. We're not doing again. We're not doing anything day trading wise or in our flex accounts or our fake accounts. However, I will say this: this is a perfect asset to trade in a fake account. It is absolutely the perfect thing to trade in a fake account because it is so effing crazy. And it trades so thin that if you're going to get whooped up, the best place to get whooped up is in a fake account. So, I would say if you are going to screw around with natural gas, that's where to do it, folks. And that's the case with everything. Use those prop firms as your test bed. You want to test a strategy, use a prop account. You want to test a new asset, you want to trade something else. You've been trading, everybody trades the NASDAQ, right? I think the days of the NASDAQ being kind of the thing is I think it's going to be limited here, especially as we kind of press on all-time highs here. It's going to become a harder and harder asset to trade. You're going to have to find something else that's moving or, that's range bound, that's in a range where you can trade it. So, if you are looking at a new asset, you use a fake account. Use a prop account. Why not? Test it there. Blow up that account. Don't blow up your real account. Testing a new asset. I have nothing, now when I start going into these equities, folks, I don't have much of anything to say. What am I going to say here? Without sounding like a complete buffoon and a blowhard. We're at all-time highs. What are you supposed to do? Do you short it up there? Do you go long? Do you just buy the dip? Yeah, all of the above, I guess, at this point. Unless we start testing some of these lower levels, here on a 5-minute, unless we start testing 26,840s, and I'm going to mark them right now. You kind of have, this is down here, but you also have another spot here at about 26,805, maybe down as much as, 2,800 even. Unless we start testing those spots down here at 786, all bets are off. Be my guest. You want to short the highs? Go ahead. Go ahead. It's not a bad option to short the highs, but do it with some common sense. Use one MNQ. Limit your risk to 25 or 30 bucks. Don't do a huge stop or $100. Keep it under $100 in my opinion. If you're going to short or just arbitrarily short the highs here. Keep those stops don't use a wide stop in there, in my opinion, because you're going to wind up just getting frustrated because you're going to keep getting stopped out, and if you don't get that pullback, to me, I'd rather risk very little up there and have it make highs, look for a reversal, look for something that looks like a reversal, right? Where you're getting a true rollover, right? And then take it and then keep your stop relatively short so that if it does go up against you, who cares? You lose 25, 50 bucks, who cares? You take a couple shots. Don't be an idiot and just keep doing it all day. That's how you blow up accounts. Take a couple shots, just make a point going in. I'm going to take 2 shots today up at the highs, shorting it. And if they don't work, I'm done with that trade. Right? That doesn't mean you're done for the day, but you're done with that trade and then move on and then watch for spots where that we've come down and possibly reversed and went higher and then look for those trades. But that's it. That's kind of the story on the NASDAQ. That's the story on the Russell. That is the story on every single one of these indexes. Because there is no there up here. I don't care what indicator. I got pivots up here. I don't care what's up here. It doesn't matter. These are just These are just fairy dust up here. These numbers mean absolutely nothing to the market because, again, there's no history. There's no history of volume, price action, nothing up there to make those numbers hold true. So you treat them that way. Treat them that way. And that's where you trade a market at all-time highs. And then take your shots when you can. Just make sure your size is not, just don't be an all-in type an asshole where you're trading 10 contracts in and out. You're going to get whacked. You're going to get whacked and burnt up. So anyway, that is kind of the story on all the indexes, no matter what they are. And I really have nothing more to say. What can you say? Like I said, without kind of blabbering on and sounding like a blowhard, this is where we're at in the market. And this is kind of where my thesis is going forward. It's going to be tough trading all three of these. Unless we get a nice, decent pullback to some of these areas that you see on these charts, all bets are off, man. Pedal to the metal. It's good for your real money. If you're trading these combines and all these other bullshit accounts, that you've been able to whip through and get payouts on, it's going to get tougher. But if you have real money, like a lot of us do, these markets are great. Because, if you have ETFs and you own Intel and you own Microsoft and you own Tesla and you own these stocks and you own CoreWeave and you actually have the stocks and stocks are going up, hey, fucking great. For opening accounts. And what that tells me, is that subscriptions are down.